All right, guys, I'd like to welcome you to today's session. My name is Patrick, if we haven't met before, and today we're going to do something that I normally always do every week. So, today we're going to learn how we can make 80 to 100 pips per day. Sounds pretty simple, and it could be simple if you've done it several times and you already know how to do it. But, I just want you to spend some quality time. This might be one of the best 5 minutes of your life and could change your results for good. But before we go in, I just want you to stay till the end of this video because you're going to get something that you probably haven't gotten before and your results might start to change. So today we're going to learn how we can make 80 pips. Literally, you can make 80, 70. You can do it multiple times for the day. You can even make multiple pips and you can try different pairs. You don't have to be doing USD CAD. So right now we're looking at the USD CAD and I am going to introduce you to something that I normally check out for before I place a trade. So we see that the market has made a dip here, and this was a dip, this was a rally, and this was a consolidation, because the market never just goes up forever. It goes up, it consolidates, it goes up, consolidates, and then comes down, consolidates. So what I normally like to do is I look for possible setups. Setups are like patterns and they call it formations for you to be able to get into a trade or make a trade. And one of the setups that I might use today, we're going to find out together. So let's keep looking. So we've seen that the market has made this low here. And then I'm also going to introduce you to this index called the Commodity Channel Index. You might already know about it, but if you don't know about it, it's called the Commodity Channel Index. And this is how you get it in. So once you come here, you come down to custom, and that's pretty it. CCI. So once you do that, you have this thing here, and the Commodity Channel Index is used to spot when a trend is about to change from being overbought or oversold. It's pretty easy to understand, but I don't want to really get deeper into it right now, but you get the idea. So right now we're looking at our markets, right? Okay, this is where we're looking at. This is all we've seen. We don't know what's happening. And the market kept consolidating, and this is all we've seen. Or we still see a little bit of consolidation. And I'm going to show you an interesting thing right now. So look at this part of the screen very closely. We had a low here in the market, and the market made a low at $1.20 roughly. And then our index made this low here, and our market made another lower low here, right? This was about $1.20 still, but a lower low from this one. So looking at a low here, a low in the index, another lower low here, no low in the index. So this is all telling me that there might be a change in the market direction, but that's all I know for now. And looking at here, we've got a sideways trend going. So this is a bit of a consolidation happening. What I normally do is I just come here quickly, I grab a trend line, and then I draw a trend line here. So this, I have a support line here, makes me know that, oh, the market has been hitting this specific price point for a bit and it's not going to change or turn around pretty soon. So what do? I put a support here, and if it breaks through here, I might get into the trade. But because I've got a warning sign saying there's an oversold market, I probably don't want to be looking at selling. I want to be looking at buying the market now. And then because, I don't know when to get into the market. Again, I like to get in at the right time. There's never a right or wrong time to get in, but you don't want to get in at a time when the move is not happening. So I like to get in when the move is about to happen. So I put this one here as well, and then this becomes my resistance. So I got a support, I got a resistance. So to get a support, you need about one, two, three, four. You only need two. I look at two. One, two, it's good. But if you have one, two, three, four, five, that's a really strong support. And for your resistance, you have one, two, three, four. Because of this indication here, telling me we had a low here and we had a low here. We had a lower low in the market, but the index didn't make that low. That's like a clear signal that things are going to turn around pretty quick. And What I normally do is I just quickly draw these lines, and if he breaks through here, I get into the trade. So guess what's going to happen? We don't know. We haven't seen anything. And once he broke through this place, you got in at this point, $1.20, and you made roughly 74 pips. You've done that for the day. Literally, if you do that multiple times with different pairs and you do literally the same thing that you just watched me do now, you're going to make money. There is no rocket science to making this money. Literally, you can do this every day of your life and you're going to make money. That's simple, guys. A lot of people say trading is complicated. See, business is simple. People just make it complicated. And I might be doing this and it might look like it's simple. It's because I've been doing it for a while. I've been doing it for a couple of years now. And I just didn't find this on YouTube that easy. I found a mentor who taught me every single thing that I know, and it made life easy for me. So, you want to find yourself someone who's succeeded in the field that you want to really get into and offer them some money and, pay them money. Don't get things for free. Tell them, hey, I want to learn this, but I'm happy to pay you to teach me. And they're going to be happy to teach you, and they're going to teach you all they know. So my mentor taught me for a year and a half, and that's how I was able to even profit from Forex. Started making $100 a day, from 100 to 200, 1,000. And now, it's just phenomenal. Like literally, I can decide to make 10 grand, 20 grand for the day if I want to really go high on my trades or just open really large lot size. Depends on my risk management and how much capital I have. And, it depends on a lot of factors, right? But you get the idea. So guys, I want you to spend some time, looking at this video over and over and over and over again. And once you understand what I just did here, go try it on a demo account or on a real account, whatsoever account you want to try it on. And if you feel like, you think you want to like get more knowledge from myself, or you want to tap into some of the things that I do, there's a link below this video here. You can just click that link and head straight to my website. There you can access one of my courses that teaches literally all the patterns that you need to see. And once you start spotting these patterns, I can go on and start showing you all these patterns. But the idea of today was just to show you something really quick that you can start getting 80 to 100 pips for the day. Once you click that link, you can access the course and get into the course, study the material very well. And if you have any questions, you can shoot me an email. I'm more than happy to help you out if you really want that, and we can start looking at your results. But guys, you get the idea. Just spend some time. You got to give time to everything you want to do, right? So spend some time with these examples that I've given you and practice them. With this example that you have right now, you can make money from the Forex market. There's no rocket science to it. But if you feel like you want to start going deeper and learn more stuff, you can shoot me an email or you can access my courses, and yeah, just get into it. All right, guys, I'm going to wrap it up right now, but you get the idea. You made 80 pips for the day. What else do you have to do? Spend time with your family. I've got a lovely family, so I always spend time with them once I'm done for the day. So I'll see you next week, guys. Have a lovely weekend.